Good afternoon, and thank you very much for joining us to this first policy panel of the conference, which will be a tour of the work of the different ICMA committees and current priorities and initiatives that the association has ongoing. We have a very distinguished panel. I will introduce them shortly, representing the range of committees of the association. My name is Pablo Portugal from Euroclear, the market infrastructure, and I sit in the Regulatory Policy Committee that is managed by Thorsten Gucke and Nathalie Westerbacke, who do a very good job. And I'll briefly mention in my introduction the work that we're doing at the moment before handing over to the other colleagues. The RPC focuses on the public affairs and general policy topics that the association is engaged in. And we have a steering committee that has a representative from the FMI community, buy side and the sell side, so reflecting the membership of the association very nicely in that arrangement. And our main focus, I would say, the last year has been the work of the European Union, in particular, around the Savings and Investments Union, and especially the market integration package that has been proposed, this big piece of legislation that is looking at supervision in the sector for market infrastructures, also some elements for asset managers as well, and other players. Various questions there. That's the most politically discussed topic at the moment in Brussels, I would say. Also a number of important issues from the buy side, I'm sure Stéphane will talk about as well. Various elements around how to improve the efficiency of the European market infrastructure, which is very fragmented, as we all know. No? So that has been the focus of the RPC in the last year. So let's go through the other committees, and there's plenty to talk about. We only, I think, have an hour with a lot of committees to go through and a lot to discuss. So let's go straight in. And I will introduce the colleagues, and they'll take forward. They'll give us their reflections on the current work of the committee. So, starting to my immediate left, we have Marc Lewell, who is co-chair of the Primary Market Practices Committee, and he's a managing director for APAC and EMEA Syndicate at JP Morgan Securities. So, Marc, what has been the focus of your committee recently?
Thank you, Pablo. So great to be here, guys. And I will start by thanking the ICMA team, both for this event, but also the incredible support that we all get over the course of the year, and in particular for the PMPC and for the Asia Bond Syndicate Forum. Rory and Mushtaq have once again gone above and beyond for all of us in a very, very busy and challenging environment. So looking back over the last year, there's three main themes I would highlight. Firstly, growth. The market just keeps getting busier, getting bigger, more counterparts, and that's in all currencies, all aspects of the primary market. The primary market, from an ICMA perspective, I think is one of the oldest, if not the oldest, part of the organization. And one would think, therefore, it's a very mature segment, but actually we do keep growing. So last year was the record year for volume for issuance in euros and in dollars, and this year is running even ahead of last year. And actually, from a euro market perspective, the three largest euro high-grade issuance days of all time have all been in the last 2 weeks, which just shows what a robust market it is. And we can't get those volumes done without coordination around the market and globally in terms of how we do business. And ICMA and PMPC plays a crucial role in bringing people together and making sure that we're keeping our market activities as efficient as possible. The second theme, which goes hand in hand with that, is globalization. We're seeing more and more issuers want to look across currencies and across continents. So US issuers looking at Europe or Asia, Asian issuers looking at Europe, vice versa. And similarly on the investor side, cross borders across investors in Asia investing more in Europe and vice versa. And those things really require coordination, and the support we get from ICMA in terms of driving global practices to sort of the best practices from each region is incredibly helpful for that. And I think in particular I'd highlight some of the work that's been done in some of the subcommittees of the various groups, things like the Middle East group, the Nordic bond group, the Australian dollar side on the ABSF. These things are really helpful in bringing everything together. And then finally, resilience. We continue to have challenges with the scale that we have going through the market. Efficiency is important. We also need to manage our regulatory partners. And again, Rory and Mushtaq and the team are incredibly helpful for us in making sure we keep everything running smoothly and are set up for the future.
Great. Let's turn now to Kristofer Middleton, who co-chairs the Financial Institution Issuer Forum, and he's engaged with Lloyds as head of term issuance and capital structuring. So,
yeah, thanks Pablo, and thanks everyone for having me here. As it says, I co-chair the Financial Institution Issuer Forum, or as we call it, FIFE for short, because it's a bit of a mouthful, with Matt Harrison, who effectively does the same job at me at Virgin Money now nationwide. And we're kept in check by Katie Kelly, who does her best. I think sometimes it is a bit like herding cats for Katie, trying to get me and Matt and everyone else to get in a room and speak to each other. But look, I think from my perspective, you know, we are very much a forum. So we meet once a quarter. It's very, very practitioner-led. It's a lot of head of issuances across Europe for large financial institutions. And we try to be very, very focused on the sort of real-world problems rather than talking about sort of theoretical or anything, you know, commercial or anything like that. It's much more what's the best practice around whether they're the bond life cycle management, whether that's accessing markets, whether it's, you know, speaking to our investors and the sort of engagement and tools there. Areas of focus, not too dissimilar actually to what Marc highlighted there. I think given the past 12 months, we've had a huge amount of volatility. If I go back a bit more than 12 months, we've had the tariff sort of period. We've had US-Iran more recently. For a bond issuer, being nimble in those markets is a huge importance to us. So some of the areas the forum has been focusing on is one, access to markets, which is very, very important for us as an issuer. You'll, I'm sure, be aware that there's times we can't access markets for whatever reason, blackout reporting periods. The buy side doesn't want to buy the bonds for whatever reason. So there's loads of different things. So access to markets and making sure we shorten those blackout windows has been super important. Currency diversification has been a huge one. And in that, the access to market questions comes up a lot. You'll know, Marc, that a lot of different global markets for a bond issuer have different ways of working and practices. And I think one thing we can push as the ICMA 5 Forum is to make sure that we're trying to get those markets where we're not quite in the right place to the right place. And we've got a big voice in that. But one more was the sort of bond allocation and investor transparency process, which I think, you know, any of you that's been involved in bond issuance, there are still some processes there that are quite archaic. And I think we can be a big voice, and we will be a big voice in taking that forward and have been over the past number of years. But lastly, I'd just say it's a forum where a group of sort of like-minded people can come together in a non-commercial environment and really challenge each other and have an honest conversation and debate the things and push things forward. And I think that's what we can bring in. Thank you to the ICMA for allowing us to have that forum and facilitating that.
Thank you. And that's such an important part of the work of the ICMA, right? To facilitate that practitioner dialogue. And I can only imagine that issuers have had so much to discuss in the current environment. Let's turn now to Sam Riley, who is chair of the Legal and Documentation Committee, and in her job, she's also head of DCM Legal and MD for Corporate and Global Institutional Banking at HSBC.
Thank you, Pablo, and good afternoon, everyone. I'm going to start by just saying a few words about the Legal and Documentation Committee. And having heard Chris, hopefully you'll be interested in our work, or probably know it already. So LDC consists of the heads and senior members of the legal teams of ICA members, and these are the teams that are most active in lead managing cross-border syndicated bond issues across EMEA. The purpose of the committee is to discuss and develop best practices related to legal and regulatory changes, which are then embedded into not only the documentation, but also transaction management practices. These are all aspects of syndicated bond issuance, which form part of the Primary Markets Handbook, which ICMA publishes. Principal aim of the work that we do is to ensure efficient transaction execution and effective best practice. LDC is assisted by 3 leading law firms who provide very valuable support with drafting, the updating the documentation to reflect these new laws and regulations. In February 2026, a new Legal and Documentation Committee was formed in the Middle East and held its first meeting in Dubai. The purpose of this Middle Eastern Legal and Documentation Forum is to bring together local members to discuss changes to laws and regulations, not only as they relate to conventional bond issuance, but also Islamic finance. Changes are also then adopted into documentation with the support of the same 3 law firms. If there are any MENAT members here today, I would encourage you to come and speak to us afterwards, because there's a lot to be done in the region and we would welcome others joining. In terms of what the committee has been doing for the past 12 months, there's been a lot of focus both in EU and UK, but rather go through the list, I'm just going to focus for a few moments on the FCA's POATAs, which are the Public Offers and Admission to Trading Regulations, easy for some to say, that came into force on the 19th of January 2026 and replaced the Prospectus Directive, which we inherited from the EU. The POATAs have affected a number of changes. Principally, I would note the removal of the distinction between retail and wholesale disclosure. And in line with the FCA's expressed desire to open the bond market to retail investors, it also introduced the PVLB. The plain vanilla listed bond, when issued by a company whose equity shares are listed in London, exempts the manufacturer from ongoing product governance with regards to that instrument. The market has not yet seen a PVLB, but we are hoping to see one in the next few months. On geopolitics, the force majeure provision was reviewed, but not triggered in our markets. However, as you would expect, disclosure and risk factors have been updated. With respect to LDC, I would have to conclude by saying, although I'm very biased, that this committee is quite critical to facilitating the proper functioning of the bond markets through the development of standard wording and guidelines, which are then adopted across a very large number of market participants.
Great. Thank you, Sam. And we all know how important documentation is, so and interesting to hear about the work that you're doing now in the Middle East as well. It shows the sort of global breadth of the organization. Turning now to Yannig Loyer, who co-chairs the Secondary Market Practices Committee and is Global Head of Markets and Liquidity Solutions at BNP Paribas Asset Management. What have you focused on the last 12 months?
Thank you, Pablo, and good afternoon all. Great to be here in this dark room while it's so bright outside, but luckily on the scene we are under spotlight and it's quite shiny here. So the work of the Secondary Market Practice Committee over the last 12 months has focused around a major transformational shift, which is the shift toward more data-driven and transparent bond markets. Starting with transparency, in particular under the EU MiFIR framework and equivalent in the UK. It's been a shift toward more, increasing the transparency of the thresholds of the fixed income market. And as you know, finding the right balance between price discovery mechanism and preserving liquidity, in particular in the less liquid part of the fixed income market, is quite a difficult balance to find. And we've been in the committee putting together the voice of the sell side, the buy side, to find the best compromise. I want to promote to the NCA and regulators to make the transparency as efficient as possible. Transparency only helps if it strengthens the liquidity as opposed to fragmenting it. Moving on from transparency, the natural next step was the consolidated tape. Again, it's a major shift going from a snapshot of pocket liquidities, which are very fragmented, to a uniform level playing field of liquidity and price discovery information, which is great in principle. We've been working a lot with the committee on the design and implementation of the tapes. And the question now is not how the tape or what the tape will look like, but how is it going to be used by market makers, by investors, by dealers. And again, we believe that's going to be a great step in this transparency of this market. Moving on into the kind of post-trade world, after focusing on CSDR in the past few years and treasury clearing in particular as a few post-trade elements, the big shift, the big focus, was on move to T+1. Also, it's different in nature. It goes toward the same direction of travel, which is about making markets more resilient, more globally aligned, and ultimately more efficient, hopefully toward moving one day to T0 and atomic settlement, one can dream. So that's a key element of the post-trade work. And the fourth big item we've been working, or theme we've been working on, is the market evolution and the structural shift in the market, with in particular technology playing a bigger role, digitalization of assets, ETF, fixed income ETF, shifting the liquidity practices and so on. How does this affect liquidity? How does this affect the way liquidity is transferred? Making fixed income markets in general more efficient and more transparent. Last, I cannot conclude without thanking the external contributors to the work of the committees. I won't put out too many names because I'm sure I will forget many, but I remember a very strong presentation by the Bank of England on the resilience of the gilt market. The consolidated tape providers came up as well to exchange on the design of the tapes. The UK T+1 workstream, testing workstream, so he came up to discuss T+1. And of course, many liquidity providers came up to discuss different market segments that help us in our work. And last, let me thank as well Nina Sway-Wolf and Andy Hill for their leadership and strong support for to the work of the committees over the last 12 months and ever. And of course, my co-chair, David.
Great. Very active area as always, the fixed income market. So transparency, consolidated tape, T+1, very busy times there. Let's move on to the European Repo and Collateral Council and its chair, Gareth Allen, who is also Global Head of Repo and Collateral and Head of Investment Execution at UBS AG.
Yeah, thanks, Pablo. So the European Repo Committee, we meet every 1 to 2 months. Let's start by thanking the support of the ICMA team to help run the committees. Alex in particular, I'm sure he's out there. Godfrey, I see in the audience. Lots of work to put the meetings, hugely packed agendas all the time. There's always so many topics to cover. we started to coalesce the agenda around three main themes. One is the post-trade settlement clearing. One is around market stability, resilience, and systemic risk. And then the other is the regulatory side, regulation, public policy, advocacy, etc. And there are too many topics to call out. You know, you asked us to talk about, you know, key things we've done in the last year. But I think some have been mentioned already. So T+1 was huge. It's still ongoing, massive engagement into the various working groups out in the market, in particular the work on things like the gating event to help T0 trades settle more efficiently. US mandatory clearing, getting ready for the change in regulation that affects the cash bond market and the repo market, which will push, you know, much of the repo market in Europe into potentially into T0 and all of the challenges that come with that. What else have we got? We got the settlement optimization and discipline, so CSDR review. We spent a lot of time looking at this, also linked to the T+1 work and post-trade efficiency, feeding some of the ESMA reviews. If we go on to market stability, resilience, the systemic risk, you know, one of the key parts of our meeting that we discuss are the repo market conditions and discussions. This has become an important standing item, assessing market developments, identifying potential risks that are emerging and actions and topics that we should focus on to help market stability. Repo market behavior during stress, so the survey is obviously a big part of the delivery of the committee, so the ICMA data on the repo markets, just to show that it is behaving even in stress conditions. It's almost like, you know, we don't need to think about when there are stress markets. Now every day is a stressed market and the market is still working, but we need to make sure we keep it working and look for potential problems ahead. Central bank facilities and the end of QT, liquidity and the role of central banks. Lots of work here, work with the Bank of England on the gilt resilience, gilt market resilience work. That's been very, very active, engaged from the committee. And then the final category on the regulatory side, we wrote a paper on demystifying haircuts in the repo space. You know, there's lots of focus on MBFIs and leverage in the system, for example. So that was a bit of work to just try and reduce some of the confusion out there in the press. What else? We got Basel and the impacts on repo. So the pure regulatory legislatory side. Still lots of work there with the EBA on open repos to try and clarify. And then again back to regulatory engagement on the US Treasury clearing. So going back to some of the SEC consultations that's still ongoing, just as that really does affect members outside of the US quite heavily if this thing goes ahead as planned. Stop there.
Very good. A lot there. I think a question for later for you and Yannig will be how your respective product areas are getting on with T+1 implementation and the go live in October next year. Turning now to Stéphane Janin, who co-chairs the Asset Management and Investors Council, the AMIC. Is always a very active place in the ICMA. And he's head of global regulatory developments and public affairs at BNP Paribas Asset Management. So I know you've been talking about the market integration package, various elements there. So please tell us what's been on the agenda recently.
Okay, thanks a lot and good afternoon to everyone. So indeed, the so-called AMIC is the Asset Management and Investors Council. I think there are one specificity. This is a purely buy-side committee of ICMA, and I think it's the single one, if I may say so, if not the unique one. So in terms of membership, to give you some flavor, we have 25 active members. Out of them, the majority is composed of international asset managers, being based either in continental Europe, including Switzerland, but not also the EU, plus in the UK. As one of the main characteristics, definitely their international remit. And I think it's very important from an industry perspective to share best practices and the thoughts and the interests that we are seeing in various developments. But beyond the asset managers themselves, in the membership, we have also professional investors, like pension funds or sovereign wealth funds. And last but not least, we have also some I would say international institutions, like the EBRD, by the way, the BIS or the EIB, the European Investment Bank. So I think it's also unique from that side. It's a buy side, but not only composed of asset managers. It includes also asset owners, both from the private or public side. And I think it gives more, I would say, dynamism and I would say vibrancy in our discussions. In terms of secretariat, I think it's interesting because we increased the ICMA staff, ICMA staff in charge of AMIC activities. In terms of numbers, it may appear as small because it's only 3 people, but since until last year, it was only 2 people. So in terms of percentage, it increased by 50%. So, I mean, in terms of value for money, I think that it's rather well used in terms of increase. And in fact, that increase reflects the growing role of the buy side on financial markets that all of you know. And I think it makes sense from that perspective. In terms of, I would say, mandate and terms of reference, as for other committees, definitely we want to follow 2 aspects, market developments and regulatory developments. What is indeed critical, as I said, is that the buy side is playing a growing role in the financial market, so we have to anticipate the forthcoming developments and to share views on that, but also from a regulatory perspective, and as Pablo said, we have to be very vigilant on any risk of regulatory developments which might potentially and unwillingly create some hurdles which might hit the competitiveness of at least the buy side asset managers, but ultimately, potentially, some asset owners as well. So in terms of how we work, we have quarterly meetings of AMIC. And last year, we had meetings in London, in Brussels, in Paris. Usually, we have guest invited people. Last year, we had McKinsey presenting not only the past, the potential future of market developments which might impact the buy side, in particular the development on private markets. We had also the deputy CEO of the FCA, Sarah Pritchard, which came to our meeting not only with a hat of the FCA, but also as deputy chair of FSB's working group on leverage, also to tackle some aspect like leverage, which of course is also impacting and coming sometimes from the buy side. We had some meeting with Banque de France, deputy CEO regarding systemic or sustainability, stability, financial stability topics at the Banque de France, François Arras, to give the Banque de France view both in terms of market developments, but also, I would say, characterizing the type of players which might impact financial stability, either from the sell side or the buy side. It was very interesting to interact with the Banque de France on that. We met also with the European Commission, because apart from the so-called MISP, which was mentioned by Pablo, we know that the European Commission is still wondering if there is a need for action on the so-called macro-prudential risks, which might impact the European Union. And last, we also met with the French AMF, with the Deputy General Secretary on the regulatory package ahead of us at EU level. So this is the type of guests we have that we interact with. And in terms of contribution to ICMA work, on the market integration and supervision package, on the regulatory side, Irene, Anita, and Saba brought our AMIC contribution to the overall contribution of ICMA, responding or bringing some position to the European Commission in the forthcoming regulatory action on the so-called market and integration and supervision package. And we also contributed to other ICMA works, especially on the repo markets, because definitely the risk of monetary clearing, if I may say so, coming from the US to the UK was not zero, and we were not seeing the need for mandatory clearing, and so we contributed to ECMA's response on the UK initiative regarding repo markets. And last but not least, even if it looks specific, on ESG data and rating providers, I want to remind two things. First of all, ICMA issued a code of conduct on ESG data and rating providers a few years ago under the auspices of the City of London, and I think it was a very positive contribution. And in the context of AMIC, ICMA proposed a survey from a user's perspective to see how we could improve potentially the transparency, the methodologies which could be provided by providers to users like us. But all in all, critical, ICMA is really unique as ICMA, buy side and sell side acting together on common topics.
Yeah, that's indeed one of the unique features of ICMA, bringing the different constituencies together. And I mean, to me, the heart of the SIU agenda has always been about the mobilization of capital, and it's about the growing role of the buy side, as you said. You know, let's turn now to Isabelle Laurent, who co-chairs chairs the principles, a very important part of ICMA's work, and is a deputy treasurer and head of funding at the EBRD. So I'm very keen to hear how you've been getting on the last 12 months.
Thank you very much. So for those that don't know, the Principles is the focus for sustainable finance and the labeled bond market. We meet monthly, sometimes even more as we get near to an annual meeting and have more to deliver, the annual meeting of the Principles and conference. We again see ourselves as being rather unique, actually, because we have an executive committee that's made up of 24 members, 8 issuers, 8 investors, and 8 market underwriters, which really is the main dynamic for the market. But we also have an advisory council, and that is made up and is recruited annually. The executive committee runs with 2 yearly terms. And the advisory council is the wider group. So it still has underwriters and issuers, but it has a lot of rating agencies, legal entities, and other key parts of the market. The purpose is really the discussion between all three and trying to provide transparency and greater guidance to the labeled bond market. There's been some sort of feeling that the market needed additional guidance, especially in relation to transition finance. So that's been a particular focus this year, working on how we crowd in the hard-to-abate sector. And so before our conference in Tokyo, I think it was last November, we ended up producing this new climate transition guidance, which we are working on supplementing again, and which itself was supplementing the Climate Transition Finance Handbook, which came out in about 6 years ago. So we have enhanced a focus on investor and issuer discussions, because of course there's a natural tension between what issuers want to give out, given that quite often they're not paid for the additional disclosures that they're having to do, and that investors need often from a regulatory standpoint. We've been focusing also on enhancing the social bond market, thinking about affordable infrastructure and access to digital inclusion. So these are all bits of new guidance that we've had. And we've also had responses to regulatory side, so focus on ESG, but also focus on SFDR 2.0, trying to get that balance again between issuer and investor side. We've got a conference next month in Milan, so do think about coming, because it's a very useful discussion that happens there. And I think that it's especially important to highlight that we're very, very fortunate to be guided by Nicolas Pfaff and Valérie Guillaumin, with a special additional thanks to Osgur and Simon, who do valiant work in herding us, and all the sub-working groups that we encompass.
Thank you very much, Isabel. Let's turn now to Emma Lovett, who co-chairs the FinTech Advisory Council and is Executive Director for Markets and Digital Assets at JP Morgan. This is an extremely active area in the markets at the moment. I feel it in my organization every day. So tell us, what has been your focus recently?
Thanks, Pablo. Good afternoon, everyone. I did just want to start off by thanking the team at ICMA, Georgina, Gabriel, Emma and Mathilde, because they really do, as has already been mentioned, manage to herd the cats with this. Obviously, the FinTech Advisory Committee covers quite a big breadth of topics. We meet quarterly, and actually the last year has been a year of transition for us. We have developed a new committee composition, which is aligned with ICMA strategy. And that really focused on a broader geographical and institutional reach. And we also sort of set a clear mandate to help ICMA avoid market fragmentation. We revisited the FinTech Advisory Committee's mission statement. It hadn't been redrafted since 2019, and so it seemed like a good time to do it. The mission of the committee needs to be dynamic, but importantly anchored in action. So the role of the committee is not just dialogue, but obviously a lot of collaboration, particularly with regulators and central banks. This work comes out, for example, the ECB recently did a lot of work and a pilot of central bank digital currency, and also the Monetary Authority of Singapore have their Project Guardian. And ICMA have been heavily involved in both. We firmly believe that technology is not, it's not the objective, but it's the enabler. And, you know, I think as my fellow chairs have outlined, the objective here is efficiency, resiliency, and growth, and how technology can play a part of that both now and in the future. We have sort of reinforced ICMA's current priorities. So the first is tracking and shaping industry transformation. That's around the tokenization of bonds, as well as AI and data-driven markets, because obviously the AI explosion over the last 24 months has been sort of a huge area of focus for us, as well as sustainable finance and that intersection with sustainable finance and technology, as well as innovation across the primary and secondary markets. Our second area of focus is regulatory engagement, as I mentioned, with the ECB and their central bank digital currency. But, you know, it's very important that the work that we do on this committee is seen as a trusted and neutral reference point and is in no way biased. The third is the standard and frameworks that are put together. Now, Brian mentioned at the AGM the work that's being done on the bond data taxonomy, and that just grows and grows. HKMA used that once again in their third digital bond that they priced at the end of last year. There's also progress on the common domain model alignment and practical guidance, such as the DLT bonds reference guide and MAS fixed income framework for Project Guardian. So what we're looking to achieve is standards and harmonization, where ICMA can add unique value as the innovation accelerates. As you've probably gathered from this, our main areas of focus have been around bond issuances. That has really evolved over the last year. There have been less bond issuances in total, but they've been far more complex using digital cash solutions like stable coins and wholesale CBDCs. We're looking at sort of like keeping a track of the first digital bond issuance that will use tokenized deposits. And then for AI, the pricing and liquidity analysis, fraud detection and surveillance. The challenge is no longer what's possible, but which use cases matter, how these models are governed, and how firms explain AI decisions to regulators. So the ICMA board is highly engaged in what we're doing. There's a board-level AI steering subcommittee which is going to be established, and a 5-year AI roadmap is now in place with practical FAQs, more real-world case studies, and stronger regulatory engagement. All of this obviously takes a great deal of education. You can't just jump into these topics. There's a lot of abbreviations and things, and so something as basic as common AI terminology is a recurring need that we hear from participants. So to finish, the FinTech Advisory Committee, we're not necessarily asking the ICMA to do more things, but we really would like to focus on doing the right things and doing the right things early, particularly where fragmentation is at most risk.
Great. We were going to have to be disciplined with the time, so now we want to look at the work ahead, and probably less than a minute each. And staying with you, Emma, from the topics that you mentioned just now, anything that you would highlight as a particular focus for the next year?
So what we've started to do on our committee is we've put a survey in place, and so they're helping to sort of the group expertise and sharpen agendas. And as other members have mentioned, we have developed a system whereby at the meetings we have somebody come in with some expertise. So Kristofer did one of our meetings around DLT bonds, and we will look to continue to do that. We are very focused on AI governance, digital cash, tokenization, and the standards that govern those. And, you know, we've had an amazing engagement over the last year, and we're looking to keep that strong as we progress over the next 12 months.
Great, thank you. Isabel, what next for the principles and your ESG standardization work?
Well, I think that one of the things that's very important is that this is a global market, but it's had fragmentation that a lot of people have had. So all across the globe, people have been producing new taxonomies and other things. So I think one of the parts of the work that we can do is to try and make sure that we can see how different bits line up with the principles, so that we can sort of pull things together and work against the fragmentation, as well as continuing to respond to requirements for an understanding of how things can be challenging for different sectors of the market, for municipalities and mortgage finance and various different things, to continue to provide guidance for them and continue to produce impact reporting metrics that can be used globally, irrespective of which sector the issuer is in.
Great. Stéphane, what would you highlight as topics for the AMIC in the coming year?
Okay, so basically 3 aspects. First of all, in terms of follow-up, I mentioned the review in the European Commission of various regulatory aspects, including the buy-side ones like AIFM directive and UCITS directive. As you know, debates are long and negotiations are long in Brussels, so we have to continue discussing with the European Commission. Next month, the AMIC meeting will invite the head of asset management in the Commission, Hélène Bussière, to discuss about the forthcoming evolution of the directives regarding UCITS and AIF managers. Apart from that, on the what we call non-bank financial intermediaries, NBFIs, we will have probably to be contributing to further thought on how to improve data sharing among regulators, between securities regulators, between prudential supervisors, and across, because we think it's really a missing element in the framework, and ultimately, usually, it comes back to us with more reportings while they do not share among themselves what we report to them. And I think it's a very important point to be discussed again and to continue helping finding solutions. Last aspect on market trends, we want to develop, I would say, more specific following of what happens on private markets in terms of development on private credit or private equity, as well as on active ETFs, because here are some trends from the buy side, and we have definitely to dig deeper into that.
Great. Thank you very much, Stéphane. Gareth, you have to ensure that repo markets are ready for T+1. And what else is going to be on the agenda?
Absolutely. So sticking with the same themes on that post-trade theme, we need to land the plane on T+1 because it's coming and it's coming very, very quickly. We need to also land the plane on US clearing, where the non-US institutions and how that interacts with the clearing landscape. And then also we're starting to look as a committee at the European landscape, how we can reduce barriers to access. The second theme around the market stability. So we spent some time with the committee coming up with what we want to focus on. We're going to spend some time on risks in the market, hunting for where the next risks could be to try and get ahead of these and be on the front foot rather than reactive. The digital space continues to be very important. We worked on the digital annex to the GMRA last year, so making sure the market is aware of that and how can use it more effectively. And then the third theme on the regulatory side and public policy, that's really just around consistent engagement with the central banks and regulators to continue to educate on the importance of repo and the plumbing in the markets.
Great, thank you very much. And Yannig, I mean, transparency, consolidated tape, technology, what would you highlight?
Well, I'd say over the past 12 months, we looked at the foundation of this transparent and data-driven bond market, be it from a regulatory, structural, or technological angle. Going forward, we'll have to focus on how it works in practice. And I'll start with, well, I think there are two big themes. First big theme is around consolidated tape and the associated liquidity. Now it's not a matter of whether the tape will exist anymore, it's how is it going to be used. Will it really impact price formation? Will it really impact electronification? How is it going to be used, and so on? And that goes hand in hand with the transparency calibration that I discussed before, because we have to make sure there is a feedback loop to ensure that markets remain resilient, and there is not too much transparency to allow liquidity, in particular in blocks, to be possible. The second theme is around the structural shift that Emma and many discussed on the panel, be it this data-driven aspect that I just mentioned, but also the fintech disrupting the market structure. AI, we've yet to see how fixed income market function when operated by agents, and so on and so on. So I think all these, in the context of the geopolitical instability, which makes the need for market resilience even more critical, is going to be a key focus of the committee going forward to ensure that markets remain resilient, functioning, and liquidity can be transferred.
Great, thank you. Sam, what's in the pipeline in the LDC's work?
I would say that the LDC is actually quite a reactive committee, and we don't always know what is coming down the track. For the knowns, we have a fantastic team at ICMA, Rory Ewing, Miriam Patterson, hopefully both here, and for herding cats, Leonie. They are absolutely brilliant at planning, responding to these consultations. It's all discussed in the committee, but they really do the heavy lifting, so a big thanks to them. And obviously looking ahead, we will be tracking integration of the POATAs. There's also the EU level 2. There's also product governance from the FCA, this form of the CCIs. But to summarize, I would say that the LDC will continue to do everything it can to reduce friction in markets. Windows are shorter these days, and issuers want to get into the market. So everything we can do to standardize, have standard documentation, standard wording, and guidelines will hopefully support that execution window when it comes.
Great. Kristofer, what are the issuer practitioners going to be talking about?
I echo a lot of the comments that the guys have made, to be honest. So, data, tech, AI, how does that help us as issuers in our day-to-day, and accessing markets, as Sam alluded to, is increasingly important when you've got such volatile markets that we have today. And I think there's a lot that can be gone at there on the bond lifecycle management processes, as we call it, and that's everything from the investor side right through to secondary trading, etc., legal documentation. And then I'd go back to what Emma said, banking and finance today will look very, very different again in 10 years' time. and tokenize assets, and particularly digital bond issuance, you know, as sat here representing our other bond issuers on the forum, I think would be of increasing importance and is going to be a huge focus over the coming 12 months and thereafter.
Great. Marc, please.
Sure. I mean, looking ahead is something Syndicate managers do somewhat reluctantly. We're definitely the dinosaurs in the room. But I think ICMA staff, and in particular Armin, have been incredibly effective in dragging us into at least the 20th century, if maybe even close to the 21st century. And a big focus is the innovation project. And in the first instance, making the most of the bond data taxonomy, but then moving on to further phases and modernizing the process from start to finish.
Great. Well, we managed to stick to the hour. I will say a few words also about my committee, the RPC. The policy agenda in the EU and the UK is going to keep us extremely busy the next 12 months. And at least the rest of this year, I expect a heavy focus to be on the market integration package in the EU, which has a lot of topics for us. There is a push to adopt that by the end of the year, or to kind of more or less conclude the negotiations by then, which is ambitious and means we're going to have to be engaging very closely the next months. With Nathalie and Torsten, we're very active engaging with the policy community. We have trips coming to the Irish presidency in Dublin. We engage with the Commission as well, so we're going to be, I expect, very, very active on that file, and everything else coming up from the EU and the UK. So that was a sort of quick tour of the work of the different committees, just giving a flavor of how much is happening, and I think a hint of the discussions in the next couple of days. So thank you very much. Join me in thanking our panelists with a round of applause.